Hey everyone, welcome back to Corporate Decoder. Today we're cracking open First Internet Bancorp's latest annual report. Get ready for some insights that might just make your financial spidey sense tingle more than finding out your bank charges a convenience fee for using that ATM. We are going to focus on the numbers so that you don't have to. First Internet Bancorp, it seems, had a pretty good year. Their net income jumped to $25.3 million. That's a decent bump from the previous year's $8.4 million. Earnings per diluted share also saw a rise, hitting 2.88, a considerable increase from the prior 0.95. But let's get into the nitty-gritty, where things get a bit more interesting. Even after a couple expenses, which they are calling gains, their return on average equity sits at a respectable 5.83%. Not bad for a year of economic ups and downs. To understand where the company see itself headed, let's dive into what management has to say about their performance and future plans. First Internet Bancorp wrapped up the year with total assets of $5.7 billion and deposits of $4.9 billion. These numbers mean First Internet Bancorp needs to make sure they keep those deposits happy so they don't go elsewhere. One thing that stands out, First Internet Bancorp is a major player in small business lending. They were the 8th largest SBA 7EN lender in fiscal year 2024. This isn't just a feel-good story either. Small businesses are vital for a healthy economy. The report emphasizes partnerships with fintech companies. In today's tech-driven world, fintechs are becoming essential for small businesses to manage their money digitally. First Internet Bancorp thinks partnering with these companies will help them gain and keep small business customers, diversify income, and find new ways to grow. Now, let's talk about the employees, often a forgotten factor in corporate success. The company has 326 employees, a figure that on its own doesn't convey much. However, the bank emphasizes that employees are their most valuable asset. They are trying to promote a culture of innovation. It seems the company is trying to develop their employees to imagine more. One interesting element is their Eureka program, which lets employees pitch unique ideas to senior management. It is meant to encourage thinking outside the box and develop employees. The bank seems to be walking the walk when it comes to diversity. They're reporting that the representation of diverse employees has nearly doubled since 2019. While all of this sounds good in theory, it would be interesting to see more concrete metrics on employee satisfaction, retention rates, and the actual impact of diversity initiatives. Now, let's check out the risks. Like any good financial report, this one has a lengthy risk factors section. Companies use these sections to show investors potential future gotchas that can affect the business. Reading them gives you a good sense for what management worries about. In today's world, you can't skip cybersecurity. Interruptions in their communications and information systems, or those of their third-party vendors, could really hurt their business. Banks are prime targets, and a breach could lead to data theft, misuse of information, and a hit to their reputation. A big risk is that economic conditions could adversely affect our revenues and profits. Recession, unemployment, changes in interest rates, they all play a role. In these situations, the company has to properly judge the creditworthiness of their customers. Nobody wants more foreclosures. Moving on, the company is exposed to higher credit risks than residential real estate loans, including conditions in the market or the economy and concentrations in the company's loan portfolio. Commercial loans make up a big chunk of their portfolio, about 80% as of the end of 2024. When the economy goes south, these loans can turn sour fast. Many of First Internet Bank's loans are secured by real estate. We need to be paying attention to real estate collateral values for a lot of these loans, so they don't become under-collateralized. The next key factor is their allowance for credit losses, because if the company underestimates the losses from bad loans, their earnings could take a hit. Let's focus on regulation. The company has to comply with the Community Reinvestment Act. First Internet has opted to operate under a CREA strategic plan, which they need to meet, and the company received a satisfactory rating in their most recent CREA examination. With all this talk of digital banking, privacy is a major thing. The company has to tell customers what they are doing with their personal information. There is also the California Consumer Privacy Act that gives California residents more control over their data. We should also look at what the company has to say about its cybersecurity. To address security, First Internet Bank uses a system called an Information Security Program that is intended to deal with breaches and cybersecurity threats. The threats are ever evolving and they may be required to spend extra cash to keep up their protective measures. There's a long list of things the company says they do to improve their cybersecurity, including having the board of directors look at this stuff. Management is also in the loop on this stuff, with the CISO and Chief Risk Officer responsible for overseeing the information security program, and also the Chief Information Officer, who also serves on the Enterprise Risk Management Committee, which is chaired by the Chief Risk Officer. The rapidly changing nature of cyber threats makes it difficult for us to understand if this is enough. Lastly, in the risk section, it was mentioned that incentive compensation and bonuses can cause employees to be aggressive. If there is too much focus on revenues, it can negatively impact long-term goals such as risk management and create incentives to take risky actions. This is something that investors always look at, so let's check it out. First, Internet Bancorp stock trades on the Nasdaq under the ticker NBK. Total cash dividends in 2024 were 24 cents per share. If dividends is something that you as an investor are interested in, it is worth checking this out. So what's the overall story here? First, Internet Bancorp is positioning itself to grow in this evolving landscape. While they face real challenges such as competition, economic pressures, and cybersecurity threats, their strategic focus, especially in small business lending and partnerships with fintech companies, could set them apart. First, Internet Bancorp's management clearly believes they have a good handle on their operations and are presenting a positive image to investors. However, a closer look reveals several areas where skepticism is warranted. I want to give management credit for talking so much about cybersecurity, but it is also something to be concerned with. First, Internet Bancorp really needs to make sure the technology they use to make these transactions are secure, but it remains to be seen. The board of directors seems to have an active role in making sure the company is doing its best to safeguard their systems. The executive leadership team is led by David Becker, who has been at the company since its inception. He seems to be working to develop the company's team, as can be seen in the diversity numbers. Overall, First Internet Bancorp appears to be a company to watch. While there are definitely risks, particularly from the rapid pace of technology change, the company is taking steps to grow and adapt. Why? Thanks for watching. If you found this helpful, please like, subscribe, and share for more corporate deep dives.